They're continuing to bleed money. The PR surrounding the company just keeps getting worse. And now we're getting to a point where the world is starting to kind of like boycott OpenAI.
Bloomberg Tech coming up. OpenAI raises $110 billion with key Amazon backing in a deal that values the startup at $730 billion.
OpenAI is in absolute chaos. As reports revealed, the company is desperately chasing a $110 billion in funding that isn't fully real. The numbers expose a brutal reality: massive AI hype, terrifying burn rates, and a business model in which 900 million users exist, but only 6% actually pay. What was sold to the world as an unstoppable AI empire is suddenly looking like a dangerously unstable tech bubble.
OpenAI seeking a new fundraising round that could value it as high as $830 billion.
OpenAI announced what appeared to be the biggest funding victory in tech history, a $110 billion investment round. The number was so massive, it instantly dominated the tech world. For a moment, it looked like Sam Altman had pulled off something no other Silicon Valley leader could even attempt. But once the excitement faded, people started examining the details. And the deeper analysts looked, the more uncomfortable the situation became.
OpenAI is in the early stages of a fundraising round that could raise as much as $100 billion. At least that's their target at this point in time. And in this fundraising round, which is at its early stages, they say it could value the company at as much as $830 billion.
OpenAI is basically willing to make a deal with anyone that will give them the money to be able to support their endeavors due to the incredibly fast rate at which they're burning money to a point where revenue just doesn't seem like it's able to catch up.
Because the $110 billion headline wasn't actually sitting in OpenAI's bank account. Only about $25 billion of that money was confirmed to arrive. Immediately, the rest of the funding was tied to conditions, milestones, and future events. Some portions depend on OpenAI eventually launching an IPO. Other pieces are structured in phases that may never fully materialize.
After OpenAI closes deal with the US Department of War, as Anthropic refuses to...
Suddenly, the largest funding announcement in tech history looked far less solid than the headlines suggested.
Was essentially threatened because they would not forego certain lines that they drew in the sand, namely that Anthropic, one of OpenAI's main rivals, straight up told the US government who were interested in working with Anthropic and utilizing their technology that they would not allow for the mass surveillance of Americans with the usage of their artificial intelligence.
The situation took an even darker turn when it came out that OpenAI had quietly signed a massive deal with the US Department of Defense. Reports indicate the contract involves providing AI capabilities for large-scale surveillance and intelligence operations, essentially tools that could monitor populations, track communications, and analyze behavior on an unprecedented scale. Sources claim this offer was so controversial that competitors like Anthropic reportedly rejected it outright, citing ethical boundaries and internal red lines.
Sam Altman seemed to be in the space of like, I respect that, and that initially indicated to people that Sam Altman would basically follow in Anthropic's footsteps when it comes to this specific issue.
OpenAI, however, took the deal, and that decision immediately fueled a wave of backlash. Across social media, ethics, forums, and tech circles, people began labeling the company as unrestrained, morally compromised, and dangerously close to weaponizing AI.
But on February 27th, 2026, he straight up came out and basically highlighted how Sam Altman and OpenAI basically caved to the demands of the US government.
The timing couldn't have been worse. Just as OpenAI was already struggling with massive burn rates, questionable funding structures, and declining investor confidence, the cancel culture storm hit full force. Employees, academics, and even prominent tech voices started publicly criticizing the deal, threatening reputational damage that could ripple through partnerships, fundraising, and hiring. Some investors reportedly began questioning their involvement, wary that association with mass surveillance could trigger regulatory scrutiny or global backlash.
Things are not looking any better for this company that is bleeding far too much money than the amount of money that it's actually making. The burn rate of OpenAI is simply unprecedented.
At the same time, OpenAI was committing hundreds of billions to infrastructure. The company proudly announced explosive growth. ChatGPT reportedly reached about 900 million weekly users. Very few digital platforms in history have expanded that quickly. But hidden behind that impressive number was a serious problem. Out of those 900 million users, only about 59 million were paying customers. That means roughly 6.6% of users actually generate subscription revenue.
I would do it if it meant that was the only way to get everybody in the world like access to great services. But if we can find something that doesn't do that, I'd prefer that.
The situation became even more complicated when OpenAI introduced a new pricing tier called ChatGPT Go.
OpenAI has 800 million weekly active users, an impressive number, but only 5% are actually paying. That's it, 5%.
The plan costs just $8 per month. The goal was obvious: convert more free users into paying customers by lowering the barrier. OpenAI had just made Codex available to free users. Previously, the tool was limited to people paying for ChatGPT Plus or the high-end Pro subscription. Once the company opened access to free users, usage exploded. Naturally, millions of people started experimenting with it.
A company with 13 billion in revenues make 1.4 trillion of spend commitments. And you've heard the criticism,
First
Sam.
of all, we're doing well more revenue than that. Second of all, Brad, if you want to sell your shares, I'll find you a buyer.
The growth looked impressive in press releases, but the financial impact was different. Some analysts started calling this the Codex illusion. The user growth looks spectacular on paper, but it does little to strengthen the underlying economics. Meanwhile, the famous $110 billion funding announcement started falling apart under closer scrutiny.
I think it's rational to price in a greater degree of uncertainty around the sustainability of earnings growth. But I think markets may be getting a little ahead of themselves. And there is almost some misunderstanding, I think, around how transformative or how disruptive these tools are.
Isn't the market meant to get ahead of itself, though?
That's true.
The largest portion of the deal involved Amazon, which was reported to have committed around $50 billion. But only about $15 billion is reportedly guaranteed immediately. The remaining $35 billion depends on future milestones and possibly an IPO. SoftBank's $30 billion pledge also comes in multiple phases, with portions financed through borrowed capital. Then there is the reported $30 billion connected to NVIDIA. Analysts struggled to find clear regulatory filings explaining the exact structure of that investment.
We are going to make a huge investment in OpenAI. Yeah, I believe in OpenAI. The work that they do is incredible. They're one of the most consequential companies of our time. And
when everything is broken down, the guaranteed funding available today appears to be closer to $25 billion. Inside OpenAI itself, the pressure to generate revenue is becoming harder to ignore. Sam Altman once described advertising inside ChatGPT as a last resort. Recently, reports have circulated suggesting the company is exploring ways to introduce ads into the platform. At the same time, OpenAI launched the low-cost ChatGPT Go.
ChatGPT traffic fell in November, second month-over-month decline of 2025. Meanwhile, Gemini jumped to 650 million monthly active users.
Plan in an attempt to convert free users into paying subscribers. Other rumors have circulated suggesting the company may eventually take a percentage of businesses or discoveries created using its AI systems. None of these strategies confirms a collapse on its own, but together they reveal a company searching aggressively for reliable revenue streams.
Predictions spell out one thing. OpenAI has reached last resort level. They're losing roughly 3 times more money than they earn. And
because the financial pressure is enormous. Estimates suggest OpenAI may generate roughly $20 billion in annual revenue. But compute costs alone could exceed $12 billion per year. When staffing, research, infrastructure expansion, and massive projects like the Stargate initiative are factored in, losses may exceed $17 billion annually. Some internal projections have suggested the number could be even higher.
Basically, other companies who are also in the AI race and competing with OpenAI are essentially outputting a better product than OpenAI. Their AI is starting to become more advanced, catching up and surpassing OpenAI's.
That burn rate makes OpenAI look very different from the tech giants it is often compared with. Companies like Google, Microsoft, and Meta invest heavily in artificial intelligence, but they fund those investments with enormous profits from existing businesses. Google alone generates over $130 billion in annual profit. Those companies can afford to experiment with AI. OpenAI cannot.
OpenAI is a company that's heavily relying on investments from outside third-party companies in order to support their endeavors, to support the vast amount of money that is required to build the data centers, the AI.
If that happens inside the AI sector, the consequences could spread far beyond a single company. Is this the beginning of the most powerful technological revolution in modern history? Or the early stages of the biggest technology bubble the world has ever seen?